thinking about buying a home in Colorado Springs, but wondering if renting might be actually the smarter move? If you're in the military, especially PCSing or rotating every few years, this decision isn't just emotional, it's financial. And today, I'm going to walk you through the real pros and the real cons, and who buying versus renting actually makes sense for. We help military families relocate to Colorado Springs every single week. You're balancing BAH, timelines, kids, pets, deployments, and the reality that you may only be here 2 to 5 years. So this isn't just a surface level conversation, it's a strategic one. By the end of this video, you'll have a much clearer understanding of what renting truly costs, what owning truly requires, and how to evaluate this decision in a way that protects both your money and your peace of mind. Let's start with renting. There are real advantages to renting, especially during a PCS. First, it's simpler. You sign a lease, you move in, there's no appraisal, there's no inspection negotiation, there's no underwriting process. When you're juggling report dates and moving trucks, simplicity has value. Second, lower responsibility. If the furnace breaks, the landlord handles it. If the roof leaks, that's not your bill. That reduces financial surprises. Third, flexibility. If orders change in 2 years, you finish your lease and move. You don't have to worry about selling, timing, or whether the Colorado Springs housing market is up or down at that moment. And fourth, something people don't always say when you rent. The house doesn't have to be perfect. It just has to function. There's less emotional pressure to get it right. Now, let's talk about the financial side of renting. If you're paying around $2,300 per month in rent, that's $27,600 per year. Over 3 years, that's $82,800. And that money is gone. It doesn't reduce a loan balance. It doesn't create equity. It doesn't give you options when you PCS again. It's a lot like paying 100% interest on a home. Now, that doesn't automatically make renting wrong. It just means we need to compare it properly. So let's shift to owning. What are the real advantages of buying a home in Colorado Springs as a military family? First, equity potential. If you stay 3 to 5 years and the property appreciates even moderately, you may walk away with meaningful equity. That equity can fund your next down payment and give you financial breathing room or become part of a long-term wealth strategy. Second, payment stability. With a fixed rate mortgage, your principal and interest remain steady. Rent can increase year after year. Your mortgage typically doesn't outside of taxes and insurance. Third, control. You can fence the backyard, you can paint the walls, you can choose proximity to base, schools, or other military families. You're not subject to landlord rules. Fourth, VA loan advantages, 0 down, competitive rates, no private mortgage insurance. That changes the math significantly for many military buyers relocating to Colorado Springs. Now let's talk about the responsibilities, because this is where ownership becomes strategic. Maintenance is on you. The HVAC, the irrigation system, the roof, the small things and the big things. But here's something many families overlook. The way you maintain and improve your home directly impacts how much equity you build. In the Colorado Springs housing market, we've seen military families build meaningful equity over 3 to 5 years. We've also seen families choose to rent strategically and avoid the market timing pressure. Both can be smart, but when families choose to buy, there are intentional ways to strengthen their position. Simple DIY improvements matter. Painting walls with modern neutral colors that are in style, not bold personal palettes, makes resale easier. Maintaining your yard matters more than people think. Making sure your irrigation system works properly. fertilizing your yard consistently, trimming trees, refreshing mulch. Curb appeal impacts buyer perception immediately. Servicing your furnace and central air conditioning system annually protects functionality and inspection outcomes later. Keeping a clean, well-maintained home with regular upkeep reduces deferred maintenance issues that can show up during the resale negotiations. These aren't expensive upgrades, they're disciplined habits. And this is where we operate differently. At the Pena team, we stay in touch with you while you live here, not just when you buy or sell. We're relational, yes, but we're also strategic. If you're planning to PCS in 3 to 5 years, the maintenance decisions you make today affect your equity later. We'll give you insight on what helps and what doesn't. For example, is it wise to invest in solar panels? Should you enter into long-term security system contracts that may complicate a future sale? Will replacing the siding with vinyl actually increase resale value or just recover part of the cost? These are questions you should ask before making an investment, not after. Some families ask us whether they should make extra principal payments on their mortgage. That answer isn't one size fits all. In some economic environments, aggressively paying down the principal may make sense. In others, it may be wiser to allocate extra funds toward diversified investments while preserving liquidity, especially if you may sell in a few years. The local economy and the real estate forecast matter. Should you plan to hold the home for 3 to 5 years, that timeline can significantly affect whether buying outperforms renting. And when it's time to PCS, another strategic question comes up. Should you sell or should you rent the property out? If the home is in a desirable rental area near base and the numbers work, holding it as a rental could build long-term wealth. But managing tenants yourself versus hiring a property manager is another layer of responsibility and cost. These are not emotional decisions, they're strategic ones. If this is raising questions about your specific timeline, BAH rate, equity outlook, or exit strategy, there's a link in this description where you can get clarity or ask us directly. Some families want to run side-by-side numbers. Others want to plan 2 to 3 years ahead. Either way, that's where to start. Now, let's balance this. What are the real cons of owning? Market timing risk if your stay is shorter than expected, selling costs when you PCS, and emotional attachment that can cloud financial judgment. Who's renting a better fit for? Families here for 1 or 2 years, those in intense deployment cycles who don't want maintenance responsibilities, families who prioritize flexibility over equity. Who is owning a better fit for? Families that plan to be here 3 to 5 years, those comfortable with maintaining a home, those whose mortgage stays aligned with BAH, those thinking strategically about resale or rentability at the next duty station. Here's the most important point. The right decision is both financial and emotional. Financially, does the math make sense over your realistic timeline? Emotionally, does ownership reduce stress or increase it? Some military families love the stability and control of owning. Others prefer the flexibility and simplicity of renting. There is no universal right answer, but there is a right answer for your situation. And the one thing you will always get from the Pena team is honesty. If buying doesn't make sense for your timeline, we'll tell you. If renting is smarter for this PCS cycle, we'll say that too. The goal isn't just to buy a house. It's to make a decision that protects your equity, your flexibility, and your peace of mind. If this was helpful, make sure to like and subscribe so you don't miss a future video. And check out this next video. It builds on what we just talked about and will help you take the next step.